Here on the Colour of Country Life, good to catch up again with Matt Dalgleish from Thomas Elder Markets. How's it going, Matt?
Good, Ricky. How are you?
All right, thank you. Look, they talk about train spotting in the UK, but you've been ship spotting. You've been watching the export numbers for cattle and sheep, and it looks like there's a mixed bag depending on which one you're following.
Yeah, that's right. A fantastic movie, train spotting, though. But I digress. So the beef market was the big one for April. We normally see a downturn in April for beef exports just because we do have kind of lower production and there's those closures in the abattoirs over the Easter Anzac Day. So it's not uncommon to see a dip in April. Normally, if you look at the 5-year trend, the dip's about 9 to 10% of volumes. But this April, so from March to April, we saw volumes down 17% for all of our beef exports. And that's the biggest fall since 2017.
Well, and so you're saying it's not just the public holiday period. What else is driving this such a big drop?
Yeah, look, the two markets that came off significantly for that period, Japan came off about 30-odd%, and South Korea was the other one that came off, I think about 17 or 90% from memory. So both kind of big falls. The other two big markets are, of course, China and the US, and they also had declines, but they were about 13 and 11% respectively. So it's really a bit of a downturn. You know, Japan's our biggest market for beef exports, so having them come off that kind of aggressively was somewhat concerning. But I guess on the positive side, so I've been a bit worried about what's been going on in China with regards to this spread of Omicron and the lockdowns in Shanghai and the potential lockdown now facing Beijing. And I was really watching to see whether we're starting to notice any change to our red meat exports into China at this stage. They're not as soft as some of the other places, so it's something to keep an eye on for future kind of months' reports for exports.
Yeah, I have seen pictures circulating on social media of this sort of traffic jam of ships trying to get into China, but from what you're saying, it looks like at least the beef, they're sort of waving that through.
Yeah, I mean, that's the other issue, I guess. You've got the lockdowns within the country that are not allowing people to get out and kind of consume, and that has some implications for their economic growth longer term. But yeah, the other thing is that supply chain disruption off the port of Shanghai, and certainly that's impacting the wool sector, is saying it's becoming increasingly difficult to get wool across and into China. So it's one of those things where it's a developing issue, and hopefully it can get sorted out because it may have kind of longer term implications for this year for a whole lot of our exports.
Now, on the ship spotting, you've been seeing some better numbers for our lamb producers, though.
Yeah, no, there was so particularly to the US. So that's been a really strong market for our lamb exports last season, and it started well again this year. And in April, they were quite strong. So the April numbers, we saw a small decline from March to April, but from a very high level. And where April's sitting now is about 35% above the 5-year trend for April. So really strong volumes of lamb still going into the US, which is a good sign for our sheep producers.
And still on sheep, what's that doing for us then on the domestic front in terms of pricing? And I guess we've had a few congested weeks, if you like, when it comes to the public holidays and some auctions not going during those weeks.
Yeah, that's right. And the price had been kind of easing over, like through that April period. But as we got towards the end of April, we have started to see the trade lamb indicator find a bit of a base. I think we might have spoke about that a few weeks back, that I was saying that we shouldn't be far away before we find a base. And certainly this week we've seen the trade lamb indicator now start to gain a bit of traction. We're up about 2% this week. And just sitting under 800 cents. So normally as we head into May is when we start to see a little bit more tightness in the market in terms of availability. If those kind of last season lambs are starting to run a bit thin, and we start to see prices climb as we head towards winter. So it looks like we're about getting set for that.
And we're going to swing back and forth a bit here, but on the beef front, the Eastern Young Cattle Indicator seems to be doing a similar thing. Since mid-April, it's climbed about 35 cents, which is the best climb it's had for a while.
Yeah, that's right. We're back above 1,100 cents for the Eastern Young Cattle Indicator. So, that's kind of gained a bit of ground as well. And look, it's not as pronounced. The move through winter for kind of higher pricing is a bit more of a sheep or lamb phenomenon. But you do also see a bit of creep in pricing, like higher pricing for cattle as well as we head into winter. It's just that scenario of, farmers are able to hold on to stock a little bit easier. They've got a bit more comfort because there's autumn rains coming through. That means that they don't, they've gone through that hotter period, certainly in the south, and they don't have to turn off as much, so they tend to hold a bit of stock, and you tend to see prices drift a bit higher through that winter period.
Now, you've also written a bit recently at thomaseldermarkets.com.au regarding the cost of living when it comes to your meat prices. No surprise, I guess, on the beef front, given how high the Eastern Young Cattle Indicator has been travelling, but we're now seeing those sorts of prices for the producer reflected at the supermarket in the inflation data.
That's right, yeah. The week prior we had the inflation numbers out, and that 5.1% headline rate, which was a big one, and it's forced the hand of the RBA to raise rates this week, which is kind of pretty much what the market was expecting after that inflation number. And yeah, like you're saying, beef, in terms of the meats, beef's been the bigger contributor, inflationary contributor. That's kind of, if you compare where the prices are now to where they were last year, they're up about 9% this year for beef prices alone. So they were the strongest of all the meat types, contributing to that higher CPI. Other things that were kind of up were the coffee pricing. I think there's been a big rally in coffee beans internationally, so the coffee prices have finally started to respond to that in terms of at a retail level. Those kind of, I guess, supply chain issues have started to flow through into pricing for the retail consumer.
All right, Matt, thanks very much for your time, and you can find out more at thomaseldermarkets.com.au. Thanks for joining us today on Flow.
No worries. Thanks, Ricky.